Hello, it's tax season, and I wanted to make a quick video to tell you about all the documents you'll need when you file your taxes, especially from a financial advisor's perspective. Every time you withdraw money from a retirement account, such as an IRA account or a 401k account, a 1099-R form is issued. It's very important to report that form on your taxes because it shows that there was a withdrawal made from the account. Additionally, if you've made a rollover from one retirement account to the other, let's say you moved money from an IRA account to another IRA account or a 401k to an IRA, you will also get a 1099-R. Now, this is not a form that you have to pay taxes on, but it is the way for the IRS to keep track of the transfers from one institution to the other. You're also going to receive a 1099 form from any income that you have, like a Social Security check or a pension check. That shows the income that you're getting from those sources and any taxes that were withheld. All those have to be reported on your income. These forms are critical for accurately reporting your income to the IRS. If you have after-tax accounts, like a brokerage account or joint account with a financial institution like Fidelity or Charles Schwab, you're going to be receiving a 1099, a consolidated 1099, they call it, or 1099 DIV and or a 1099 INT, depending on what you have in those accounts. These 1099s report your capital gains, your capital losses, any dividends or interest that you've earned within those accounts. Now keep in mind that sometimes from a brokerage account, those statements could be delayed because the mutual fund or the investment fund that you have inside of those accounts can be late in reporting the interest or the gains that were earned within that particular fund. And so if you have an individual account or a joint account that's not a retirement account, you may not want to schedule your appointment with your accountant too early because generally there will be some delays. The bottom line is this, just make sure you reach out to us to confirm that you have all the correct tax documents. We don't want you to go to the accountant with some of your forms missing, and then you'll have to redo the tax return all over again. And remember, it's never a good idea to take all your tax documents and go to your accountant without knowing what your tax liability is going to be. It's critical that you sit down with someone who can project your income in the future and tell you, based on the different decisions that you make when it comes to the order of withdrawal or which accounts you withdraw from, what the tax consequences are going to be for those decisions, so that when you go to the accountant to get your taxes done or when you do your taxes yourself, you have a pretty close representation of exactly what you're going to be owed in taxes, if anything. If you're unsure about your tax consequences, please feel free to reach out to us, and we can use software to help analyze, based on your current income and based on how much you're withdrawing from which account, what that would mean for you tax-wise, and if there are any other more efficient ways of doing it so that you pay less taxes, and maybe not this year. You also have to think about this over your lifetime. We may want to trade off and pay more taxes today for the sake of paying less taxes in the future, as opposed to just trying to minimize taxes for today and potentially having a larger obligation of tax payments in the future. If you're unsure about your tax liability, please reach out to us. We can use software to analyze the tax consequences of your financial decisions. No one should be doing their taxes blind. No one should be surprised by the amount of taxes they owe. We are here to help you make informed decisions and avoid surprises. Have a wonderful tax season.